Hi there, this is Alvin, and welcome to the Kickstart Commerce podcast, where we share search marketing and domain investing strategies to help grow your business. In today's episode, our guest is Nikul Sanghvi, a highly esteemed professional domain investor of ccTLDs and the founder and principal of hypernames.co, a digital asset boutique connecting startups and subject matter experts with high impact, memorable domains. Today, Nikul and I discuss insightful perspectives and lessons learned from his ccTLD investing experiences thus far. We also dive deep into a detailed analysis of his best year in domaining yet, detailing purchases, renewals, registrations, commissions, and fees, and more. We also chat about the pros and cons of ccTLD investing and everything in between. And last but not least, Nikul and I talk ccTLD predictions and what's next on the horizon. So with that, Nikul, welcome back and thank you for making time to join us today.
Hey, Alvin, thanks for having me on.
Yeah, thank you, man. And so to kick things off, Nikul, let's talk a bit because it's been a few months since we last taped the interview with you and Morgan Linton on the state of ccTLD investing. So, I mean, man, what have you been up to since then?
Just kind of been most of the time a teacher homeschooling the kids, and that's become my full-time job. But no, I've mainly been, I think, in the sense of domains, tidying up my portfolio. I think I've been focusing a lot on renewals and what to keep, what to drop. So it's been, I think, a few months of admin, getting kind of things tightened up and ready for the year ahead.
Nice. And so no returning to consulting world then, possibly.
No, so I am also pitching. I've been pitching for a bunch of different projects, but it's quite tricky in the sense that I think businesses are starting to open up a bit more, but towards the end of last year, I think businesses weren't really kind of like looking to take much on in terms of new projects. So fingers crossed, I'm hopeful over the next couple of months, someone likes one of my crazy ideas and I get back into it. But yeah.
And then and also probably what I guess is driving a bit of whether or not you're getting back into consulting is the lockdown. So COVID. So there's been a lift and then there's been a resurgence, and it's like, okay, back to lockdown we go. So that I bet you that has played also into, just the ability to enter back into consulting or not, I would imagine.
Yeah, I've also found that it is a little bit of out of sight, out of mind when you're actually in an office and you're bumping into people, you're having random kind of collisions around a water cooler or in the coffee area. You can get a lot more conversations going, which are just kind of unplanned, unscheduled, and a lot more interactions in the sense of being able to build repertoire with people and being able to pitch things a little bit more subtly. And then when you're at a little bit of a distance and everything's going back into email and onto Zoom calls, it feels a lot more formal. It's almost like, I can't Jedi mind trick people over the internet. It's got to be face to face. But it's something I think companies are starting to have people back into the offices, especially after when the lockdown ends. I imagine people will start to get back in, but I think a lot of people won't be going back to the office as well. So it's something where I've also got to get better at kind of, pitching through email or on a call and being able to communicate ideas better in that way as well.
That's awesome. So, I mean, do you think that you'll go back, or will domaining be it?
No. So I'm hoping I will go back. I think domaining, I mentioned in my post that domaining is really difficult. It's a really difficult thing to kind of earn a living off for various reasons. I mean, I think if I have the choice, I would love to have another source of income and then actually be able to kind of not touch the domaining business, allow it to kind of grow. So what I'm hoping for is that, maybe even if it's not a huge amount of money through kind of consulting, even if it isn't as much as before, if I can create one or two other kind of sources of revenue, I think it would definitely help the investment side of the business. I mean, in the most simplest way, it's like if you looked at it from a farming perspective and you eat all your seeds, there's nothing left to replant. So, I mean,
Indeed.
I just kind of feel like, as much as possible, if you can kind of leave those dollars in the business, they get replanted, and you don't necessarily reap the rewards immediately, but the money that the sales that are going on right now, those were kind of trees that were planted 2, 3, 4 years ago.
And so, kind of jumping into your report. So you've done this report now. What this makes, I guess, the fourth year?
Think so, yeah. I think I did a bit of a summary last year, so I jumped across 2017, 18, 19, just to kind of like pull everything together, tighten it up a bit, because I've been writing on this thread for maybe 4 years, I think, since 2017. Yeah.
Yep, that is correct.
And the first one kind of just started off as had a lot of people getting really excited by some of the sales I was posting in the reported sales thread, and this is on Name Pros, and I had this real level of guilt in that I was putting forward kind of the sales, and I was saying, look, these are the sales I've made, and lots of people are getting excited, but I had this in the back of my head that, like, it's like on Instagram, you only see the best bits of everyone's life. And I had to say to everyone, hey, look, yeah, these sales happen, but there's a whole lot of life that happens beyond them. And even before this year, or before that 2017 year, I had a lot of years where, I either didn't make money or I made losses. And I thought that was a really important message to open with back then when I created my kind of user account on the forum. And then since then, I've just tried to kind of share and push with the kind of same ethos that transparency and openness will help more people become better domainers than just sharing sales data on its own. So transparency and openness in the sense of all aspects of running a portfolio.
Nice. Now, I guess for those new listeners who don't necessarily know you, now, how long have you been investing in domains?
So it's probably since 2009.
Oh, wow.
But when very early on, I'd say from 2009 till maybe 2015, 16, I wouldn't really call myself an investor. I'd call myself someone that at that point in time, I was dipping my toe in and out. I was buying domains I didn't really understand, very well in the sense of like what I was buying.
You said I was straight up a speculator.
Yeah. To be honest, I wouldn't even call myself a speculator. I wouldn't even qualify for that. I think I was on the starting point, and this is a journey that everybody goes through where, your first few years, you think you've hit a gold mine just by registering whatever's kind of available.
Right.
You don't understand how to value things, so I made a lot of mistakes very early on. And then over time, you start to read, you start to listen to things, you start to kind of learn from your own mistakes. And I think I'd only really kind of started to take things seriously from 2015 onwards. So probably I'd be happy to call myself an investor for at least the last 5 years or so.
Now, in terms of this report, so for those of you that are looking at the report, as Nikul alluded to, it is entitled Almost a Decade of Domaining. And so it's on Name Pros. And actually, when you posted your 2020 results on Twitter, and at the time of this recording, it's January 25th on a Monday. And so I went and looked at it today. And I almost flipped out, man, because when I got to the page, I looked and I was like, wait, 8 pages of comments, and not realizing though that this is a thread that's been over the course of years, obviously. Yeah. But I was like, man, I'm like, what in the world? Nikul has like started a revolution if he posted this morning and there are 8 pages of comments.
No, yeah.
But I quickly caught the error in my ways. And so, but I do appreciate you coming back to this post, obviously, and not starting a new one, but kind of continuing this journey, this story. And so one of the things that caught me, like right off the guard, like you give a summary here of basically what your last 4 years of trading looks like, which is phenomenal. In 2017, though, I mean, that's like every domainer's dream to sell, what is it, like 14 names and a total revenue of almost $129,000. Like that is phenomenal. Then your next year, you basically go from 14 sales to 32 sales, but not as much revenue. So like from that 2017 or 2018, kind of what happened? Was there a change in strategy, or what kind of walk us through, I guess, the high level play by play, or what, the high level synopsis of kind of how did we go from 14 sales, 129,000 to 32 sales, more sales, but less revenue?
Yeah, sure. 2016, so the year before that kind of graph starts, I had 0 sales. So I stripped out that year because that graph would just look crazy with the this year I made no money. But I made so I'd bought a domain. I bought it in 2012.
Wow.
And I bought this to start a business. I bought a domain, datascience.com, to start a business. That domain was kind of the first. I'd had a bunch of sales, I think, by that point, and that was the first domain that I sold in 2015 for a 6-figure amount. And I achieved that by, I can say now, a lot of luck, because I had plans for that domain, and I just kept saying no, 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 no. And by the point I'd said no so many times, and then I actually clocked what the offer was, I realized that actually this was a significant sum of money. And probably even if I'd done the business that I had planned for the domain, it would have taken me a lot longer to reach that number.
Right.
So I sold that in 2015 and really started investing some of that money. And again, in 2016, I was investing a lot of that money. And I was investing around that time, not just in .co, I was looking at a lot of .coms, but also .org. So I think when I went kind of from 0 to 128, almost 129 in 2017, it was also because of the level of risk I was taking, but the quality of the inventory I was buying. In that kind of 2016 period, I was buying, I think, better quality domains than I am now. One, because I was much more willing to take the risk. I was just, the capital arrived out of nowhere, so I wasn't so afraid to spend it.
And you had other sources of revenue too,
I
right?
did. Yeah. So I was full-time in work, or I was kind of like working the whole week as well. So I think that 2017, I'd say it's a very different year to the others because of the types of domains that I was selling. Many of them were sold in the kind of like 5-figure range. And a lot of them were bought for higher amounts. And if you kind of see the 2020 trading,
right,
the most expensive domain I sold was like $279 as an acquisition, and the rest range from like $2 to $120. And at that time in 2016, my strategy was very different. So I was focusing on fewer names, but much higher in value. And then I think there was a shift there for me around that kind of 2017 mark where, there was changes for me and my family. I was spending much more time at home. So my twin boys were born in 2017. So I was like, okay, I'm going to have a few years, 1 year at home, or a few years where I'm not going to be working as much. So I almost tried to pivot my strategy towards how can I invest less, but make a higher margin. So I think in that 2017 period, my investment was a lot higher and my margin was less. So although there's that 128, 129 there, the investments that went in within 2016, 2015, they were a lot higher. Whereas I think to generate that kind of 85 in 2018, I used significantly less money. So I almost, from 2018, 2019, I became a lot more risk averse. I was kind of like, okay, well, what strategies are out there for me to spend less, but bring the margins up? And that's what really kind of pulled me into the kind of ccTLDs and .co, the coupon deals that were around at that time. I think one of the first kind of strategy pieces I wrote in 2018 was around turning like maybe $9,000 or $10,000 into 70 or 80. That was more like brute force and a volume game. So I really went from few high quality domains towards a different strategy where I was looking at volume.
Interesting. And so now all of these sales then across so from 2017 to 2020 have been predominantly .co sales.
That's right. Yes. So even this year, I don't think there was anything in .com. I think everything was out of the 8376 were .cos, 2 IOs, a CC, GG, a .so. and then a .uk and a .co.uk. So everything, everything, the kitchen sink except for .com,
which is phenomenal, because obviously we always hear the argument in the industry, and it will probably always be .com, 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 .com. When you start investing in .com. Great. In your case, though, it's actually worked out to be the opposite. That you found a market here in the .co market, and it served you well, and it's not just a fluke. You've done it for multiple years, almost closing in on half a decade, if not the full decade. But at least by these numbers, we know it's 4 years going. Basically, seeing that you do the same in 2021, it'll be a half a decade, which isn't bad. I mean, that isn't a fluke. That's you got a trend going here.
Yeah, I think at least the last 3 years has been predominantly .co sales. I think part of it's just been changes in terms of what companies decided to use. So I always think, it could have not gone this way. Say, for example, .co and .io hadn't been popular with startups, and it had been
Right.
2 other random extensions, I probably wouldn't have been as fortunate. But I think what we saw very early on from kind of 2010, 2011, 2012 onwards is startups and entrepreneurs shifting towards alternatives and not just sticking with .com domains. So yeah, I think I just got lucky in catching and riding on that trend where there was a space, there was a market whereby people want really strong SLDs, but don't necessarily have the budget to match the TLD for it to be .com. And also, I think when you are a small business, when you only have a certain level of funding, 6-figure or even 5-figure domains are completely off the table, because within the first 6 months of a business, your likelihood of changing your mind or pivoting the business in a different direction, or, especially within the first 3 months of just planning and trying to get a startup off the ground, there's about 1,000 decisions going on and a lot of different places to allocate capital. So locking in a huge amount of money into a domain is probably only for startup founders who've already had previous successes and they can, afford that asset, or they actually see that asset as an investment, and sometimes those founders see those assets outside of the company. They just have those domains as investments anyway. So I think
kind of like the Brent Oxleys of the world.
Yeah, that's right. And I think what a lot of founders have worked out is, even if you own, 10 great domains and you decide to start a business on one, you can actually personally rent the domain into the business.
Right.
And I think that's done quite often, where until the business gets to a certain size, it doesn't really buy it off the founder, it just leases it.
Well, one thing that sticks out to me here in these numbers across the 4 years, 2017, 2018, 2019, 2020, is and it's almost, I'll pose it as a question, but it's a hypothesis based on, and this is just strictly looking at the chart itself, not having gone through the data myself, but from the numbers that I'm seeing here, the 129,000 in 2017, the 85,000 2018, almost 108,000 in 2019, and then your top of the top, 141,000 in 2020. Now, something that I draw back to your original comment where you had alluded to having additional sources of income. And so one of the things that I kind of can see here in the number of sales going from 14, 32, 48, and then 83 respectively across 2017, 2018, 2019, 2020. One of the things that I pose as a hypothesis, it makes it appear that if I didn't know any better, you're likely in 2017, 2018, you were probably negotiating more of the deals than you were in 2019 and 2020. It seems like 2019, 2020 were probably more buy it now domains versus you actually negotiating. Or if you did negotiate, it wasn't long and drawn out. It was probably maybe 1 to 2 exchanges, and then you just kind of pull the trigger and go. Is that a correct hypothesis or assumption that I've made here?
Yes, I definitely think as those 3 years, so from 2018, 19, 20, one thing has definitely been happening, which is that my average sale price has been going down. So each year I've been moving more volume, but then the kind of final sale price or the average sale price has been dropping each year. And there's probably a couple of things that go into that makeup. One is probably my own psychology of like, looking for cash flow or hunting for that cash flow, doing a lot of deals as make offer deals where actually I worked out in the post that I was discounting on make offer by about 40%. I think a lot of the time especially in 2020 was if I could make the sale, I would make it. And I think having make offer was quite confusing because you can see that the transaction, I guess the transaction could have happened or it could not have happened in the sense that when you have buy it now, you know that, okay, someone's either happy with the price or they're not. And you only find out that they are happy. You never interact with someone that doesn't like the price. So with make offer, you alleviate some sense of that FOMO where you're like, okay, I'll put a buy it now on there, but I'll also put make an offer. So if someone, maybe doesn't want to spend 3,000, maybe they'll offer 2,000. So all the time I was trying to pull around that mark around when the offers came in, I was trying to get people up to around 50 to 80% of the final price. But I think in 2020, I was quite eager to close those sales. So actually I was just closing them as fast as possible. The other thing I think that happened is in 2020, I was able to get a lot of my domains onto the fast transfer network. A lot of the fast transfer buy it now sales that happened were on the lower end. So those were also kind of bringing down the average, but then they were increasing the total sales.
And are those like sub 1,000s or in terms of pricing?
I had a lot. I didn't actually work out how many were sub 1,000, but I had a lot in the kind of like 749, 750, maybe a lot under 1,000, and maybe most of the buys I'd say were between kind of 500 and 1,500. I did have a few coming through at 2,500, 3,000. But then I think most of the ones that were also negotiated, even where I was getting an offer, the domain might only be 750, but I was getting an offer of like 300, 400, 500. I was just taking it. And that's where I think I talk about it a little bit in the post where, yes, it helped me with the cash flow and it helped me with the sell-through rate. And I'm quite a slow thinker, so I'm digesting the data myself today and trying to mull it over. I'm listening to a lot of the feedback I'm getting, and I'm just also wondering about, sometimes it's very easy to look at sell-through rate. It's very easy to focus on, sales do give you motivation. You need to kind of keep seeing them to tick along. But what you don't consider in the moment is what's the effect on your overall yield throughout the year.
Right.
So I could have potentially done less sales and still made more money.
Right.
In hindsight, I can't do anything now, but I think there was a certain level of eagerness as well that if you don't have any other sources of income, you do want those sales to keep happening, and there's a reassurance that comes with that constant cash flow. So in a way, it helps to have make offer because I think you have a larger number of contact points with potential buyers.
Right.
But potentially in terms of overall yield, I'm going to be learning this year whether a buy it now strategy is more effective or not.
Right. And I think, like you said, you hit the point of what it means to have additional sources of revenue. It plays on the psyche. One cannot deny it. That when you know that you have, it's like going into a month, and let's say the first week of the month you have two sales that were $7,000 each. Well, anything probably after that, you're in a different mindset versus 3 weeks have passed in a month and you're like, oh, okay, next week is the end of the month. I've not sold anything. And just to sell something in that month, you'll move on something that you may have otherwise would not have moved on had the sales happen earlier. But I think it works. Like I said, it works both ways. It's a month to month game. And I think the other side, while we applaud and cheer and everybody kind of gets that glitter or glimmer in their eye of, oh my gosh, Nikul sold $141,000 worth of domains. So it is possible. The flip side of that is, but let's talk about the expenses, because it's not like it was $141,000 that went straight to your pocket. It did, but it also, there's some things that we're pulling from that.
Yeah, and I think I've mentioned before, but those kind of things outside of sales are actually really important to talk about. And I think that's a huge part of why these posts are important to me. So that from that 141, there's a couple of things I've got on the post where 21 comes off in commissions and fees. So that's again an immediately big chunk.
And most of that's like platform, right? So if a
Yeah.
platform like Dan charges 5%,
Yep.
or 9%,
Yep.
or whatever the percentage is, or if like it's after Nick and they charge 20%.
That's right. Yeah.
Got it.
So that 21,000 is, I think, predominantly Dan transaction fees, so that 9%, and after Nick fees at 20. And then I also had around 29,000 in renewals and further registrations, and that's a big chunk of money as well. So
Right.
even if you divide that up across the year, you're looking at kind of like just over 2,000 each month, close to $2,500 each month. So that's your baseline to sell. So if you're not kind of like bringing that in, you've got that pressure of not even breaking even.
Yep.
So I think my renewals were probably closer to I think they're closer to about 20, and then that 9,000 was probably spent across other stuff. So that 29 is renewals and further registration. So I kind of ended with, out of that 141, the initial kind of net was probably around 90,000. And then I made the decision this year, which I haven't done in previous years, to actually then use half of that for stepping up and actually reinvesting. So over the last few years, I've hardly been spending. I've actually not been really buying properly. And that comes back, it comes back to that 20 kind of, in that 2015, 2016, I was in full investment mode. I wasn't in selling mode, but I was buying quite heavily, and I was buying quite fearlessly. And then, the last couple of years I've been selling, but I've had a certain fear around buying. So it was a strange year, because I think to decide that actually, half of it should go into new purchases and acquisitions, and only half of it should kind of like, and that's before tax as well. So taking home 46,000 before tax, it's not enough to kind of definitely not enough for us in London to run the household. So we made the decision, okay, we'll bite into some of our savings in order to reinvest back into the business. And we're fortunate, we're lucky to have those savings there as well. But I could have very easily decided not to spend that 45 at all. But I always think, in this kind of like, it's a framework called regret minimization. So you're trying to think, okay, in 3 to 5 years, what types of regrets could I have? Or in 10 years? And then how do I today mitigate those? How do I kind of decide that actually today's person can look after the person who I might be in 3 or 5 years? And part of me was always like, if I am not investing today, I'm not potentially building a source of income for myself in the future. I'm pretty much eating away at the existing portfolio. I'm not to use that analogy, I'm not replanting anything today. So that was the thinking there, whereby, okay, we might lose some savings, but we're trying, it's either you save, and there's no interest rates right now anyway in a bank account. There's you can kind of save, and that money's not really doing much. Or actually we use that for living costs, and instead the capital that was in the business, we reinvested that. When I say we, myself and my wife.
Right. Oh man, it's a family. It's a family sport. A lot of us, they look at our names and they see Alvin, they see Nikul, they see, Josh Reese and Josh Cohen. They see these individual names, but the reality is it's a family thing. Especially when you're doing this, and this is, a source of income for you. Now I want to go back to something that you kind of alluded to, but I think it's certainly worth mentioning. Obviously, the commission and fees, 21,000. There's not really too much that you can do about that. That's just kind of the cost of business, doing business. And it's like, to get the sale, it's like, okay, well, yeah, you could not use after Nick, but you also miss a good demographic, a good sizable demographic to put domains in front of. Now, that being said, so, commissions, fees, cost of doing business. But the thing that I want to key in on and really understand is the 29,000 for renewals and further registrations. Now, do you use a strategy in terms of your approach to your renewals and registration? So, for instance, before you answer that, I myself, as you were going through, I'm thinking about my own portfolio, and it's roughly about 2,000 names, mostly .com. So when it's all said and done, like hosting and everything, all in all, I know that every year I have to basically cover expenses, or be willing to cover expenses for anywhere from $20,000 to $22,000. Now, that being said, for me, in terms of, how many domains I try to sell in a given month, which I don't do any outbound. I mean, I do list on Afternic, but most of those are like shoot the moon prices. Fine with that, but most of my action comes from Dan. Now, that being said, obviously for me, I kind of narrow things down and understand how much money is going out on a monthly basis for renewal. So I can chart and kind of see, oh, June is my highest month of renewals. And so before I get to June, I don't want to necessarily wait to get to June and then trying to sell and negotiate based on June's numbers. But it's like, okay, well, I typically will try to handle mine by quarter. So if I can close as many sales as possible in that first quarter, then it's like pay it forward, knock out Q2 renewals, so that at least gives me, some sort of runway. But it also frees me up in terms of flexibility of mind and psyche to be able to negotiate that if make offers do come in. Now, do you use any sort of strategy when it comes to renewals and, just your further registrations in terms of timing and cash flow management?
Yeah, so I think I'm quite similar, but not a quarter ahead. I would love that. I'm probably working almost like a month ahead. So
Right.
I'm basically making sure that for next month, I don't actually renew them a month in advance, but I make sure that the capital's available. If, say, for example, this month or next month, sorry, I know that there's $2,000 worth of renewals coming, I separate that money out as soon as I've got it within the 6 weeks prior to that. So I know that, I'm always working that kind of month, 4 to 6 weeks ahead to make sure that there's enough cash flow to cover
Right.
those.
Now, do you
I
keep that money before you go on there? Do you keep that money in a separate account? So, like, I have an account that's based on purchases, but then I actually have a bank account that's solely dedicated to renewals only.
Yeah, so I have it in, it's almost like folders within the bank account. You can, so it's the same bank account, but
Hmm.
you can kind of separate it out or split it out.
Right.
Um, but I think a lot of the time, as long as I can see that the minimum number in the account is at a certain level, I've got some level of confidence that actually, okay, I know I'm not going to spend below that. I'm going to try and maintain it. So, I don't want to see that number go below $3,000, $4,000 in that particular account that the renewals are going to come from. I just won't touch it. And actually, if it's for me, because I'm working with multiple accounts like USD or dollar accounts, but then also pounds or British
Mm.
sterling. So even if I can see a month in advance that I've got the pounds, but there's not enough dollars, I'll just transfer them across to make sure that I've got enough to cover the following 4 to 6 weeks. But I guess I think what a lot of people have in terms of, especially I see this more on the .com side, is people buy domains that they can kind of envisage themselves holding on to forever, or at least they're buying the quality of domains where they're not thinking, I'll buy this domain, hold it for a year or 2 years, and then drop it. They're thinking, okay, this is a really good domain. I want to scale and build my portfolio. So dropping names isn't a core part of that strategy. Whereas I think for me, year on year, I'm dropping at least, I'd say like 40 to 50% of my 40% of my portfolio every year.
Really?
Yeah, especially over the last few years. So I think even that's probably why my registrations, my renewals is lower than if you looked at the size of my portfolio and you're like, okay, 2,000 domains and then renewing 2,000 .co domains or 1,800 .co domains is a huge cost. It's a much bigger number than my total renewals up there. But that's because probably less than half of them actually get renewed at least half of them get renewed maybe. But
Well, and then to
but
offset that, to throw into that though, when you purchase, you're also doing so prudently by using coupon codes, right?
that's right. Yeah. So for the ones that I am dropping, they've been bought in that kind of $2 to $6 range normally. Maybe some of them have been bought a little bit higher, $8 or $9. If I'm buying, significantly higher than that, those are the ones I'm keeping. So if I'm buying from $100 upwards, those are the ones I'm holding for the long term. But I think with that kind of strategy, it's also you don't feel a huge sense of guilt in dropping 300 and something domains or 400 domains if you know that it was a numbers game from the start. So um,
Mm, that's
on
good.
on on a particular day. I think it was a day out. I was in Austin the day after the conference, sitting in the hotel room. I had an extra day because of the way the flights worked out. And this deal came up, 199.co domains on name.com. So I'm sat in the hotel, and before I know it, I've ended up with like 350 of them. So that was okay.
Rule number one, never stay an extra day at NamesCon by yourself in a hotel room and looking through email, especially a domainer's email.
Yeah, I mean, I think, I was already hyped up and excited being at NamesCon, but yeah, so that those 350.co domains, they were bought with a very particular strategy that, okay, I know, all right, there's 350 there. I actually only over the last year sold 5 of them, but that 5 of them sold for just over $3,000. So now when I go to drop 345 of them, or, maybe I'll hold on to a few, say I drop 340 of them, I don't feel bad because I know that the ones that were there, they kind of played their part. I might keep a few of them that had actually decent inquiries on them, or they've got good traffic to them, or they stand out as actually maybe they're worth giving another year, they're worth giving one more chance. But the rest of them that get dropped, they've already played their part. It was a numbers game whereby, yeah, it's a very small sell-through rate, but I think that's been a part of the strategy when you're playing that type of volume game. You never really let the renewals catch up to it. You kind of want to make sure that you sell what you can for the first year, and they're kind of picked and they're chosen for that particular strategy. So that's the kind of methodology I've been using for the last few years for, I'd say, a good portion of the portfolio. And then the profits generated from that kind of like bulk buying, they're pushed further upstream. So then I used, say, for example, that 700 was turned into 3,000, and then you take off the commissions and you take off the cost of initially buying them. Maybe you're left with like $1,800. Then that 1,800, I would be pushing further upstream. So I'd be trying to buy better quality domains, or I'd be trying to push them towards something where I thought it was a safer, longer term investment. So I think the strategy is always, even on that lower end, you're looking to generate cash flow to push it into domains which are going to hopefully be held a little bit longer than a year.
Interesting. Now, what strikes me is odd there that for most new investors, they're likely going to say, well, wait, I thought the point was to actually purchase a name, hold on to it, and then wait for 3 to 5 years for someone to come along and buy. But what you're saying is that you're actually profitable by one, not renewing, most of the domains, but then two, you're actually using promo codes when you do purchase. And so, it kind of flies into the face of wait, what kind of strategy is this? And that being said, now, do you ever go back and repurchase any of the domains that you let drop?
So I think not anymore. I did a few years back.
And why is that?
So now I think when you drop a lot of the domains, they end up in the premium bucket as well. So the .co registry has rolled out their premium tier. So a lot of the inventory that I was buying in kind of 2017, 2018 for, $1 to $5, that would now maybe cost you $109, $120, maybe more. The other thing is, I think, is just, if I really think I would like to hold on to that domain, I would rather just pay the renewal rather than drop it, because there's so many more eyes on .co domains now than there were 2, 3, 4 years ago. So my chances of dropping it, and if it's a domain worthy of re-entering the portfolio, the odds of me grabbing it the second time round are a lot lower now than they might have been a few years back.
How do you disconnect emotionally when it comes time to, to do the renewal, to decide a renewal or to drop?
I mean, there's always some emotion in it because there's some level of gut feel about what constitutes, you look at a domain, and I'd say the first part of the filtering is the most important, because that's all done with data points. So I'm looking at within a spreadsheet a variety of factors. So I'm looking at, okay, well, initially, what have I got it priced at? What are the number of TLDs that are taken for this SLD? So if it's a word, I'm looking at, what's the count of, is it taken in 5 extensions, 10, 30, 40? So that attributes some kind of value to, how popular is that SLD. Then I'm checking always, if I'm looking to renew a .co, is the .io registered? I'm also looking at things like the Godaddy valuation. I know people hate appraisals, but I think you don't necessarily always have to use appraisals to set your own prices. I think you can integrate appraisal values into your data points just to give guidance. And sometimes that
That's
means
good.
that you might disagree with the actual valuation. You might disagree with the fact that GoDaddy says something is worth 2,000, you think it's worth 3 or 4. But if it says that domain is worth 2,000 and it says 5 others are only worth 100 or
Right.
300, I think you have to take advantage of the scale of their data set versus your own as a domainer.
Right.
And you have to understand that actually those patterns are worth value. So I do utilize those types of valuations to understand, okay, well, do I keep this or drop it, independently of what I might price it at? And then I also track traffic and inquiries as well. So if a domain's had, 2 or 3 inquiries or 1 inquiry, and I think actually it's got an opportunity that, that person might loop back around, or maybe I'll be able to follow up with them, or potentially, if it's had a couple of inquiries or it has a decent level of traffic, I might think, okay, well, there's something here. Let me hold on to it for a bit. So I combine all of these data factors to do the first pass in order to kind of like filter out, I'd say at least 80% of what I want to drop. And then some of it you just have to do by hand. You just have to use
Right.
your own eyes. You have to do manual checks for, like, I'll use LinkedIn, Crunchbase. Now, I haven't automated any of that side, so that I don't have any kind of like super software pulling in like LinkedIn or Crunchbase or any of those data sets. I just open the tab and go to them manually and look at, okay, well, how many companies have this kind of use this word in their brand? Or even if you just do a simple Google and you're searching, okay, well, who else is using this as a brand? Looking on Crunchbase. I'm not saying that in the sense of looking to match Coca-Cola, but I'm just looking in a sense of like, so you're not trying to match a particular brand, but you're saying that, okay, well, if it's a word like wave, you're looking to say, well, how many companies are called Wave?
Right.
And that's an indicator of the potential demand for that domain. So I do that even with the ones where they're on the edge. I'm not sure whether to renew them. Maybe I will, maybe I won't. I actually spend a little bit more time on those, which are kind of the maybes. I think the maybes actually eat into the most amount of time. You can kind of filter out so many very easily and not feel any emotion about them because their quality is a lot lower. But it's those ones which really catch you out and you're not sure, do I renew it, do I not? And those kind of eat into your time actually evaluating them. But yeah, I mean, what you asked about emotions, you can't completely disconnect, but you have to some extent, because those, if you get too emotional, you get too attached, there's a cost to that. So I think you have to
That's a
decide.
great point.
You have to decide what that emotion is worth. So yeah, I normally kind of also err towards caution in the sense of I would probably not keep the domain. So if I was 50-50 split, some people might decide, okay, in a 50-50, if you're on the fence, be safer and keep the domain. I'm probably on the other side where I'm like, if I'm not sure, I'll lean towards just drop it. And that's actually probably saved me a lot over the years. Whereas if I'd
Oh, I
been
bet.
and I think that's part of the decision making process, that if you're 50-50 and you're always leaning towards yes, that cost accumulates over the years. Whereas if you're 50-50 and you're leaning towards no, that saving accumulates over the years.
That is great insight. Now, one question that came to mind here that you got me thinking about, and it's a formula that I often use in terms of, make offers. So I list most of mine on Dan. Sometimes there are bins, but most of these are going to be make offers. What is your rule of thumb in regards to what you're willing to accept for a price? And what brought it to mind was when you were mentioning about let's just take, for instance, the GoDaddy appraisal. And so if I ever have a domain that comes in, oftentimes, I'll look at what that first offer is. And obviously the rule, and everybody will say it, don't accept the first offer. But if I ever look at an offer to where, let's say that GoDaddy, they appraised it at $1,500. but the offer comes in something like 2,500. And I will look and I'll say to myself, I'm like, okay, what are my odds of getting that person from the 25 maybe to 2.5 times whatever the appraisal amount is? Like, do you use formulas such as that or things like that to help you gauge or negotiate? Or, how would you negotiate something like that in the case of a domain that was valued at 1,500 and it comes in with an inquiry at 2,500? Or would you just hit the accept button?
Um, I mean,
He's
I'd
like,
love to.
depends on where I'm at in
Yeah,
the month.
do you know what? It does. It depends what mood you're in. I'd love to say there's some divine strategy that I stick to like a robot, but sometimes what happens is you're in the mood to take it or you're not. You're in the mood to have to play with the buyer and you're like, oh, let's see how far I can push this. And I think most of the time, and this was something that I talked about, a while back, where I was like, "What would you pay for that domain?" So when I think whenever you're
That's
countering and
good.
whenever you're trying to kind of like raise the odds, there's a cost in the sense of if you're seeking some type of diminishing return, so you're trying to negotiate from 2,500 up to 3,000. I think I'm always in the back of my head. I'm like, well, how hard do I want to fight for that last 500? Because the odds are not in my favor in the sense that if I keep fighting and I lose the sale,
Yep.
um, I wouldn't have bought that domain for 2,500. And how much longer might I have to wait to reach that 3,000? Is someone going to offer that next year? Is someone going to offer that in 3 months, 1 month,
Right.
or maybe never? So I think I look at it from the perspective of if it's a decent offer and I'm happy with it, I would rather not lose the sale. I'd rather just kind of lock it in. So I think there's a few different ways. It's a little bit tricky on Dan because when the first offer comes in, you can't actually write anything back. But I
Right.
mean, there's a number of different strategies that you can use to kind of like accept the first offer without like, especially on email, you want to take the offer, you're like, okay, that's a good offer, I want to go ahead. But you can kind of go back and say, hey, look, yeah, I'm happy to go ahead if it's paid within a certain time frame, or you kind of want to put something, yeah, I'm happy to go ahead if you're able to cover escrow fees, or there's
Right.
something you can kind of like push back with in a way of saying yes without kind of like screaming at them, yes, I'll take it. So on Dan it's a little bit tricky because you have to actually either accept or counter with a number before you can send the buyer a message. And I've always wondered, if there was some type of every time you accept the first offer, the deal always fails. And a lot of people talk about that. But I've accepted loads of offers the first time and the deal's gone through. So it's always a lottery. I think like if you're happy with the number, take it. And if the deal doesn't come through, that buyer was probably not that serious in the first place. Even if you negotiated them up, they might have been flaky anyway.
Right.
And if they are serious, they'll if they put in a serious offer which is close to your asking price, sometimes they've just done it because you've got the make offer box available. They were probably like,
$1.
it's $300. Let me just try at 2,000 and then or 2,500 and just see if I can get that little bit discount. And in most of those scenarios, I'm like, yeah, fine, have the discount. Thank you for the offer. And yeah, I normally, I think, and this is something probably that maybe it doesn't help me over the long run, maybe it does, but my priority is normally if it's within the range whereby this domain has generated a reasonable level of profit and it's worth more within that transaction to the buyer than it is to me, I'll normally lean towards closing that sale rather than trying to prolong any negotiation or force them to a particular number, which is based on any kind of rule.
And so let me ask you this then. So, and this happened to me. Matter of fact, it happened to me a couple of weeks ago. I get an offer on Dan. Let's just say the person's name is Bob Jenkins. And obviously on Dan, you can actually see, where the IP or where they say the IP, and which country the buyer or the prospect is contacting you from. And offer came in, I looked at the domain, and it was almost 2.5 times more, than the what GoDaddy value or validated the I guess appraisal or what they appraised it to be. And then the moment that I hit approve, I then noticed the first and last name changes.
Yes.
And then I go and look up that person's name to discover I was like, oh, I've been
Yeah.
had, I've been played.
It changes when they actually go through the checkout to pay for the item, right? So when it turns up as Bill Gates instead of Mr. Jenkins.
There you go.
Instead
So
of
have you had that happen?
Yeah, I have. And you know what? You can't kick yourself over it if the price is right. So I think this is where different people's strategy alters. Where like I know that there's some very famous domainers that will be like, never sell unless you know who you're selling to, and
Right.
you've got to extract the maximum value of the domain, and to do that, you have to know who you're selling to and how much they're worth, and what the domain means to them, and you have to understand their business model and understand, okay, well, if they buy this domain, how much will it sell for? I think that strategy has a place, but it doesn't have a place at $2,000 or $3,000. I think that's a strategy that you might consider when the asset is worth, high five, high or six, or it's a 7-figure domain. That's then a different ball game. I think when you're looking at, especially in the sub 5,000 range, I think if you're happy with the number, it doesn't really matter who buys the domain. I think maybe you feel afterwards, I could have got more out of this. But I've seen also big companies when they're buying, and entrepreneurs when they're buying, and they are price sensitive, and they have options. So they might be looking at your domain and they've decided, oh, my budget is 5,000. And then as soon as you're pushing for 10, the deal's gone and they decided they want something else. So I think unless you really have a desire, or you really think there's a lot of squeeze to be had from that domain, and the domain has long-term value, and there's other buyers that might want it. So unless you feel, you're in a strong enough position to actually kind of justify squeezing that extra out of the domain, I think you're better off taking the money, reinvesting it, and then allowing it to compound over time. So within the time frame that you might wait for the perfect offer, or that type of negotiation where you're extracting higher value out because you know that the buying entity is worth a lot more, in the time frame that it takes to maybe do that and lose the sale or make the sale, I think you're better off taking the money and reinvesting. So
Totally.
But again, I think I don't think there's a right or wrong answer there, because I know that different people sell in different ways, and people have had successes, really saying that, okay, maybe most people would have cashed out at 10 or 20 or 30,000. But I also feel like the strategy whereby you hold out for like, crazy money on a domain, you've got to not need the money of that sale in the first place.
Right.
So I think I wrote in the post, I've said it in the past, but unless you're already a millionaire, stressful, difficult, and financially unproductive to depend on domain names as your main source of income, by the time you're batting down 20, 30, 40, 50K, or, you're batting away 100, 150,000 or 200,000 in the hopes of something extravagantly bigger, you're hopefully already in the financial position where that type of number that you're turning down isn't going to change your life, or isn't going to help you.
Right.
So if you're already sitting in, a couple of $1 million home, and you've got 5 million in the bank account, or you're Michael Saylor and you just say no until voice.com hits 30 million, he had to, in order to get to 30 million, turn down all of the numbers that many of us would have taken. But all of us don't have that level of wealth where 20 million doesn't make a dent in our savings. It doesn't change anything. So I think a lot of the time, the advice that's given is given from the perspective of people that already have a huge amount of wealth, and numbers don't really make a difference to them. Whereas for most domainers, especially if you're in the learning phase, it's very difficult to have a distinct certainty about the value of the domain, because you could easily turn down a lot of opportunity across your portfolio in order to kind of smash the ball out of the baseball stadium. You're just not taking the runs and the points where you can. I think whilst you're learning that churn, or that allowing inventory to flow, that's also quite productive, because you're learning about values, you're learning how to negotiate, you're learning how to kind of create regular sales and allow for cash flow. If you're happy with the number, or if it's more than you think you would pay for the domain, I'd say sell it and reinvest, unless you think that particular domain has a significantly higher value or a much larger audience that might be willing to buy it. Don't worry about extracting the maximum value from one particular entity.
Right. And I mean, and it goes back to, and you said it so well in terms of when you have additional sources of income, and the income is not, the income that to be had is not going to change your life one way or the other. Yeah, of course you can sit back and say no. I mean,
Yeah.
and who's going to fault you for doing it? Because you're not hurting anybody. So to say you're certainly not hurting yourself. But I think you and we had this conversation almost a year ago to the date. And I think it was when we were doing the My Name's Con, one of those interviews there. And I was telling you, I think prior to us recording, at how 2019, I was pushing the ballot a bit with a lot of my negotiations. And it was just kind of like, nope, I'm not budging. You're going to meet my number. You're going to meet my number. And when I look back at those sales that didn't happen, I mean, you tab that up, and that's at least between $40,000 to $50,000 that could have been realized. And so now you look back and go, well, what happened to those domains a year from now? And they're still there, still
Yep.
there, and in most cases have not had an inquiry. And so now, looking back, 2020 is literally and figuratively hindsight at this
Yeah.
point. But I look back and I go, oh shoot, did I actually miss the window of opportunity on those domains, or will it come back around? Who knows? But the reality is I was in a mindset to where at the time I had consulting revenue, kind of like yourself previously, and there was a different mindset. Whereas now it's like, well, I don't have that consulting revenue that's there. So whereas, okay, I'd probably, I mean, it'd be a deep discount. I'd probably looking anywhere between 10 and 15,000
Yeah.
total accumulated sales on something that, when I was in a different mindset, it was like 40, 50,000 total.
I guess the equation there is on the ones that you did sell and you pushed a lot harder. Did you achieve enough to offset the ones that didn't sell?
Correct.
And I mean, I just said like half an hour ago that the biggest sale I've ever made is because I just said no constantly for ages. So I'm kind of like giving a mixed message here, but it comes back to mindset, exactly like you've said, that at that particular point in time, I just didn't want to sell the domain. I had plans for it. I had other sources of income. I wasn't depending on domaining for, running my household or my kind of monthly operating costs.
But did you know that domain would fetch the value that you wind up
No,
selling?
no. So that's where I think luck plays a huge part, because say the number before I accepted, if the offer that I accepted hadn't turned up and I was sitting here today still with the domain, and I had in mind the number that arrived just on the last no that I said, I could be feeling totally different today. I could be like, why didn't I take that? So that's where I think it does come down to what the situation is. I think it's hard to look back and see, okay, what could I have done differently, or did I do it right? And sometimes actually it's a lot of luck. It's just the time. It depends on the circumstance of the buyer. It depends on your own personal circumstances. But I think that model doesn't necessarily create a predictable business whereby it does that type of model whereby like you're saying no, no, no on everything, and you're trying to reach the maximum, you're trying to reach the apex of value on every single negotiation. That doesn't create a sustainable revenue stream. It doesn't create a ongoing business model. It creates, a portfolio of lottery tickets rather than, you know, um,
That's good.
it's a different strategy. And I think if you adopt that strategy, what you have to assume is that you're not going to need the proceeds of that domain portfolio. You're not going to depend on that but income. And I think when I started to do I've had that strategy in the past, but then as soon as I started to think, okay, well, I have to shift this from a whole bunch of lottery tickets to some certainty about, a regular monthly income, or,
Right.
I have to know that there's some strategy here which is going to generate cash flow on a month to month basis. The strategy has to change away from that. So I've definitely been in that place where I'm like, well, I have to get the maximum. I'll turn down everything else, and it does work. But I guess what I'm trying to think about it from the perspective of your level of certainty, or your risk, or your variation on each negotiation is so wild that yes, one or two might work out, but it's in no way predictable. Whereas I think when you adopt a strategy whereby you're pricing sensibly, you're allowing for some maybe discounting, you're allowing for just actually inventory to flow through the portfolio, you gain some level of confidence around what type of cash flow the business might generate based off numbers. Whereas the other way is it's almost like there's not much mathematics you can apply to it. It literally is like quite a wild ride.
Game of whack-a-mole.
Yeah, and also the only thing with that strategy is we only hear from the people that hit the mole. In the whack-a-mole, we only hear from the ones that there was Joseph, I think it was earlier this last year.
Yeah,
where
automation name.
Yeah, cognitive.
Yep.
Yeah,
cognitive automation.
That's a great story. It's a fantastic story. And then I'm like, well, what about all the ones that we didn't hear about that said no and turned down 100,000, turned down 200,000 to try and reach 500? What about all of those stories? Where are they? And it's just they're out there, but you don't hear them. So I think it's very easy to focus on the ones where, okay, it did pay off or it did work.
Right.
And it's that same, you hear about entrepreneurs that like, I dropped out of school and look, I'm super rich. And then you're like, okay, well, let's look at it from a perspective of mathematics. And you say, well, let's just take everybody that dropped out of school. And then it's a different equation. It's a different type of, you're looking at it not just for a particular subgroup that has done really well. And you're like, there's a correlation here that all these successful entrepreneurs dropped out of school, so that must be the causality. That must be that when you drop out of school you do really well in life. Is not necessarily working that way.
That isn't a foolproof domain investing strategy to say the least.
Yeah. I think it's really easy to look for data points that fit your confirmation. That's the confirmation bias, right? It's really easy to always seek things that fit your thesis. There's always really easy to look for people that are in a position of where you want to be and then try and mold yourself around them. And that's part of that bias as well. But I think you have to look at a wider picture. You have to look at a broader picture. And to sustain yourself over the long term, you have to look at it from a perspective of managing that risk and return.
Definitely. Now, Nikul, let me ask you this. So on an average, you probably close anywhere from 5 to 10 sales in a given month. Now, how do you choose which platforms you list and at what pricing? Obviously, you're using Afternic and Dan for most of these. So kind of walk us through that thought process and how you see a domain and then decide, okay, this is going to go on Afternic, this is going to go on Dan, or it's going to go on both. Walk us through that.
Yeah, sure. So I actually only list on both of those two platforms. I don't have any of these domains listed anywhere else.
So no squad help.
No squad help.
Wow.
And I've always been really curious on those platforms, but never been smart enough to work out how they actually work. Because as soon as everything kicks off with the coins and the boosts, and I'm like, whoa, okay, you lost me, But there's definitely kind of an interest there that I want to start checking out those platforms this year, learning a bit more about them. But for me, Afternic is, it's the broadest distribution network, especially if you've got fast transfer enabled. I think Sado's MLS network in the past has been quite effective, but I kind of gave up on listing on Sado a couple of years back. So
likewise,
it just didn't work, and I think there was a lot of mess with how you approve the listing and does it get accepted on Sedo, where they're looking for you're messing around with text files or and then so after everything goes on Afternic, everything goes on Dan, both go on with a buy it now price and both have make offer. I think when the domains are distributed on the Afternic network and through GoDaddy, they're not really presented with that make offer option, or it's not as kind of obvious. So there's a lot of buy it nows that come through that network. I think 95% of my domains are on Dan Landers. So that's the two routes that I think that there's two core paths. One is either you go to the landing page and there's a path there to kind of like buy the domain, or you're actually searching through a registrar GoDaddy or name,
Right.
or you're just typing and something comes up. Oh, hey, you're looking for this. Would you be interested in this? Or you're looking for that specific domain through that route. I think those are two core parts. I know that marketplaces are doing more and more work in terms of increasing the visibility of domains through marketplace search and contests and different routes like that. But I've just found those to be a lot less in terms of sales generated through those routes, where I think most of the marketplaces, they also encourage people to use landing pages.
Right.
And that's because so much business just comes through the landing page. I don't think there's many marketplaces out there that say, hey, just list your domains with us because loads of people search here every month, other than Afternic. Even if you don't use I didn't use their landing pages, and it still generated sales. So that to me is a really powerful search network. Whereas for the landing pages themselves, if the sale is coming through for my price point, I think buy it now pages work a lot better. So yeah,
Right.
I list everything. Everything has a price. I think for domains where they might be like $10,000 and higher, I've been using Uniregistry pages for some of those, just to test it out. But that's only because you can self-broker through those if you want. But I've also got some in Dan that I'm testing. So I haven't quite worked out what might be the right one there. It might be FT. That's also another great option. So I've kind of this year I'll play a little bit with where to list that upper end, but I think everything 5,000 and under, it seems to be working quite well at Dan.
And so then, Nikul, now, kind of wrapping up here, let's talk about the any ccTLD predictions that you have based on kind of where we see the market today. I mean, obviously, last week, it was climate.vc sold for something like $21,000. And so obviously folks are going to hear this interview. They're going to hear just, how successful you've been in .co, as well as having sold two .ios, one .cc. So kind of walk us through what's your mindset on in terms of if someone's out there and they want to become a ccTLD investor, how do you gauge whether or not to take on that much risk looking at other, ccTLDs?
Firstly, I'd say each ccTLD has a lot of distinct characteristics. And when we're talking about ccTLDs in this sense, I think we're mostly talking about repurposed ccTLDs. So
Right.
rather than .de, .co.uk, we're talking about, when I mention ccTLDs or repurposed, I'm thinking .io, .co, .ai. So these are ccTLDs, which they were initially designated for countries, but maybe they've been broadened out, or they've been internationalized, or they've actually been started to use for a particular niche, like .gg for gaming or .vc for venture capital. So I think first is to understand actually, if you're looking at that repurposed ccTLD, what really is kind of that niche supporting, or what does it represent? So I knew very early on that there was a strong correlation between .co and startups, and that there was a strong connection between .io and SaaS and technology businesses and startups again in that space. And then GG is a little bit more obvious, where you've got the kind of gaming and esports community, .vc for venture capital. So I think then you start to understand, okay, within that niche or within that sector, what are the types of words that work and what doesn't work? So again, there you might not find that the same word works across all of those extensions. There might be different SLDs that are more powerful in one or in the other. I think what worries me, and especially with like if you're looking at those large sales like 20,000 for climate.vc, I think you have to recognize which sales are outliers or which sales don't necessarily represent a frequent market pattern, because it's very easy to get sucked into a frenzy of buying and scooping up everything available, or even overpaying in the aftermarket, because sometimes there's certain hype cycles and they're outcomes of echo chambers where
Right.
someone posts a couple of sales and we're all super excited, or somebody says this is really heating up and everyone wants to rush in because no one wants to miss out. And then a lot of what happens is you hear about some sales, but you don't hear about how much money everyone else wasted as a whole.
Right. Right.
And again, it comes back to the numbers that you can see and the numbers that you can't see. So I think with VC, we've definitely seen some success with GG as well. But I know so many domainers, myself included, who've invested in these kind of niches, knowing that they're high risk categories, but we haven't necessarily seen the payoff that others have. So I'd exercise that word of caution in the sense that some of these renewals can be quite high. Even some of the upfront purchase costs can be quite high. I think that kind of like, I know we're talking about ccTLDs, but that risk return extends even further sometimes, where
Definitely.
if you're looking at new GTLDs, you might sometimes are looking at premium renewals year after year after year, rather than just a premium up front even. So with the ccTLDs, I think there's definitely scope, there's definitely opportunity from an investment point of view. And a lot of the time my investment thesis has been, there's room to make money outside of .com. But the scale of that opportunity and also the risk to return is kind of often misunderstood. I think it's really easy for people, especially people that don't have experience either in domains or they don't have experience in that particular niche. It's really easy to lose a lot of money quickly because you kind of dive in thinking, if I buy 100 VCs are like, I don't know, like chocolate.vc and lawnmower.vc, and I'm buying keywords that are popular in .com or keywords that have sold for a lot in .com in the past, and you might not really see those shift. I was just about to type in lawnmower.vc to see. now that I've said that, it's probably
registered. It's registered. It's gone.
Yeah, it's probably
you spoke it into existence. As soon as it flew out of your mouth, it was like registered.
Registered, or it's probably owned by some multi-billion-dollar venture capital firm.
Exactly.
Yeah, I just think. I do have some level of excitement around the opportunity, but I exercise a huge amount of caution because a lot of us that are investing into some of these ccTLDs quite early on are very well and knowing of the risks that we know that we might not sell many domains over the course of the year. We're trying to price them in a way that they cover our renewal costs or they cover our purchase costs. But I think for people that are new to the industry or people that are new to those particular ccTLDs, I'd say, take your time to learn, look at the sales patterns, look at name bio, and then factor all those things in before you actually kind of jump all in. And, maybe even spread your risk. Don't go all into one, or maybe try and look at multiple. But we've all said in the past, I mean, when we were talking with Morgan, I think for people that are essentially new to domaining, I think .com is the safest place to be, because with most other extensions, you're swimming upstream, and with some of these newer ones, they are quite small niches. I mean, how many VCs are out there? It's like it's not like there's a whole country of VCs out there.
Yeah,
there's only a certain number of potential buyers in that market.
Yeah, VCs aren't like gas stations.
yeah. I mean, it's a tricky one. I think climate.vc, obviously, maybe there was 2 end users fighting over it, and I haven't actually checked who that domain's gone to, but I think that's also the other thing, to be able to separate out end user prices versus wholesale prices. So as an investor, you're not sucking in, you're not like kind of misunderstanding and putting your capital into domains at the higher end where you're moving towards end user prices, thinking that that might be a wholesale value, or you're not extrapolating it to the sense that last month the highest sale was 5k and this month it's 20k, so next month it must be like 50 or 100.
Right.
You're not extrapolating it in some crazy pattern where actually you think this is going to the moon, because I think some of these are outliers and some of these patterns are actually really hard to predict.
Totally. You hit the exact point. So I'm actually putting together a written piece about what ccTLD is prime and next for exponential growth. And one of the things that it's becoming quite clear to me is I cannot distinguish end user and wholesale, so retail wholesale pricing.
Yep.
And so, for instance, with IO, I'm convinced. I just don't know necessarily which way or how to dissect the data to know any way otherwise. But I'm totally convinced that we're well beyond wholesale pricing. Like with where that pricing is, I'm like, don't go past go. going into there. Or if you go into investing in .io, you better surely know what you're doing. Because like when I look at your list here of what is it, the 83 sales that are here, one of the things that strikes me is that in most cases you're not going beyond sometimes 7 or 8 characters. I mean, there are a few outliers there in terms of SLD length, but most are not beyond 7, 8 characters, and most are going to be one word. I do see a couple of 2 words in there, like one click or overflow or call me.co and or go save.co. I see a couple of those in there that would be deemed as 2 words, but I mean, like I'm looking at one here, smart lighting, growth marketing. Those are more of the longer ones. And so it's one of those things of just getting to, like, even if you were going to invest in other ccTLDs, it's probably best to stay, I mean, close to home. And when I say close to home, probably 5 characters or less, one word, and not unless it just truly makes sense.
Yeah.
We don't want to go out there amphibian.vc
Yeah.
or anything that extravagant. It's like, no, don't do that. Really stay close to home, keep a tight rein on that SLD, and ensure that it matches.
Yeah, and I think the other thing that really stands out when I'm looking at that list of domains is there's no 5-figure sales in the whole list. So
Oh, yeah.
and this is really interesting that a portfolio which averaged over the course of the year at around 2,000 domains didn't generate any sales in the 5-figure range. Kind of putting myself down there, but it actually,
but the data is what it is.
It stands out to me to say that actually, yes, you can go crazy buying ccTLDs, but even their ranges of what their upper limits are capped, and the curve on those is that actually, if you're looking at it, that kind of like bell curve, the bulk of the trades that happen on these ccTLDs sit within a range of like, maybe 500 to 2,500, slightly higher on maybe some of them like .io, but those larger sales where you're looking at $10,000 to $50,000 or higher are much more rare. So again, if you're I do buy it on the higher end, and I do try and sell on that higher end, but the fact that I can go a whole year without closing any of those deals, I think that speaks huge volumes as to what you should be considering when you're in an auction, and you're paying 5, 6 up to 12,000. And I do think margins are getting squashed. So I've definitely paid up this year for a few domains where I'm paying what I would have considered 5 years ago to be end user pricing, and I'm paying it. I think the reason that I'm doing that is because I know that the margins are getting squashed, the domains themselves are getting harder and harder to find. And I think a lot of other people in the market feel similarly. But I think if you are going to pay up and you are going to kind of overextend yourself to kind of pick a particular domain, it better be within that top 1% of the ccTLD of the so kind of like, if you are really going to pay up for any domain within .vc, .gg, .io, .co, it better be kind of like the best of the best within that extension, and that's you're really looking to minimize risk in a way that if you're going to pay high numbers for a particular domain, you want to know that maybe its liquid value isn't far off. So if you're going to really overextend and maybe pay 5,000, 10,000 for a particular domain, you want to know that its liquid value is maybe 8 or 7. But I think it's really hard on .vc and .gg. It's really hard to say that it's worth extending to that level on those, because their track record is very different to .io and .co. They're a lot newer. There isn't proof of kind of a high volume of sales in that kind of 5-figure range. I think .io, .ai, .co are much more established. So when you see people paying up for them in auctions, I think it's because of that they're established so well as alternatives to .com. But again, that could swing, that could change. So I think you don't want to go crazy. I think you've got to buy within your own limits.
Totally. And I just pulled up a spreadsheet here, just based on the report the written content that I'm doing. And it's interesting to look at. So I pulled numbers from NameBio over the last 3 years for each of the ccTLDs. So, for instance, I did .ai, .tv, .cc, .vc, .gg, .to, .io, .co, .ag, and then .ml, which there was no name bio sales data available. And so when I look at something like .ag, in 2018 total sales, not total number of sales and not total sales or dollar volume. And for AG in 2018, it was 8 were sold as tracked by name bio. 2019, 12. 2020, 19. That's seems like very slow. Versus if we look at something like a .gg, in 2018, there were 11 total sales, 2019, 30 total sales, in 2020, 172.
Are you stripping out, say, for example, park.io in those numbers? Because a lot of those might just be wholesale transactions as well.
Correct. And so that's what I get to in the actual written piece is how do you actually determine what's what based on this number? One can say, oh, well, this is actually taking off.
Yep.
But really, is it?
Yeah. I don't want to give away your piece right there, but
right. And really, is it? And so there's the rub versus when you start looking at, even if you look at .ai, in 2018, there were 309 total sales. In 2019, 2,202 sales. But then in 2020, only 1,300 sales. And so you go, wait a minute, this thing almost drops in half. But yet, if you look at the highest price in 2020, it was 107,000. Whereas in 2019, the highest priced AI was 50,000, and the highest priced back in 2018 was 101,000. So they're all over the place. And the only one that's interesting to me is .tv, which in 2018 had 209 total sales, 2019 218 total sales, 2020 only 187. And so if you base it on that number, you go, oh, well, it's moving downward.
Yeah, I mean, but we've also heard on the flip side a lot of healthy sales. So it's really confusing. It's definitely the other thing I'd say is like we've got access. I mean, we both of us have been in this space for a while. We've got access to name bio. We've got in our heads some experience and some type of database of knowing right and wrong. And this is confusing for us, right?
Right.
And I just imagine that for people that are new to the industry, it could throw things off completely, because if it's confusing to people that are in the industry, it's like gibberish to people outside. So yeah, I think that's again where you even when you're trying to discern these patterns, there are a lot of different things that can be happening to the data source. So potentially the data source might have only integrated one of the auction platforms in a particular year. Potentially the registry might have run in one particular year a large amount of auctions,
or promos,
or actually in one particular year, I don't know, there might have been much more activity just from domainer to domainer. It's really difficult to tell. So I think the only way you can kind of really work out what's happening in those spaces is either you partly have to test them yourself, or you have to learn from others within who are experiencing and testing.
And how do you test? So like, for instance, if I'm looking at, I show my hand, I go, hey, I think I even told it in our interview with Morgan, where I was like, hey, I'm looking at .cc.
Yep.
But to a certain extent, before going out and going all in, there's just certain, instead of buying 100 of these or 200 of these, start with 10.
Yeah.
And let it be your best 10 that you're going to invest in, and then just kind of see how it goes. If it goes great, add another 10 to 20 more. If that goes great, add another 25, 50. But you kind of have to build out. But I think oftentimes, especially like you start looking at .vc, you start seeing sales. And if you're blinded by what's happening on Twitter, what's being posted, how many days, and all this other stuff that just happened between all these sales, the next thing you know, you've spent $300, $400, and those may have been just anomalies and flukes that don't come to fruition for you in terms of this big grand experiment.
Yeah, there's so much statistical variance between, and especially if you're holding volumes like 10, 20, 50 domains,
Hmm.
um, it's really hard to even at that level to determine, what is significant and what's not. So I think if you've got those domains, you can look at, all right, what's the traffic volumes? Am I getting inquiries to those, even if you're not selling them? You do want to keep an eye on the market and see, okay, are they selling? Do I have similar words to the ones that are selling for that particular SLD? Is there activity in other extensions? Am I seeing that keyword being used a lot at the moment in other extensions for that particular ccTLD? Am I seeing sites and end user activity of actually domains that are bought being developed? So okay, it's not just a bubble. People, end users are buying these, and I can actually see that sites are being developed on top of them. So I think you can look at a variety of different factors, but there's so much variation from portfolio to portfolio. There's so much. I mean, each domain's unique, so it's really hard to treat them all exactly the same. So I think it's difficult. It's difficult to work out. So I definitely agree in the sense that start small, scale up, don't go crazy, stick within your means. And I think even when I have been testing some of the more kind of like newer repurposed ccTLDs like .gg, .vc, I tested .so recently. All I've done is I've taken a set amount of cash, or I've taken a set amount
Yeah.
of money, and I've said, okay, look, initially for the first year, this is all I'm going to spend. And then if I make sales, maybe I might use those sales towards renewals on the others. I'll gauge it like in that manner. So I think you have to be kind of like have some limits on initially, but beyond the point where you don't have any evidence, or before the point that you have evidence, you have to in some way limit what your losses might end up being. So if you can afford 300, go in at 300. If you can afford 500, go in at 500. If you think, okay, I'm going to put in 1,000 or 2,000 and I'll know that I'm going to completely potentially lose this, I think that's the way to look at it, to understand that it's quite high risk. And it's almost like an R&D budget, I'd call it, not necessarily even an investing budget. So if you're going to take that money out, you're
Right.
doing research and development, rather than what you're not doing is adding to your kind of like core investments. What you're doing is utilizing that capital to explore. So I think you've almost got to assume at the point you're making those types of investments in the very new extensions, it's for the purposes of research rather than investment.
Right. I totally agree. Well, to wrap things up, Nikul, if you and I are having this conversation like a year from now, kind of what do you make is on, what's next on the horizon for ccTLDs, in your opinion, kind of what is there anything to be looking out for over 2021, or just kind of what goes through your mind?
I'm still, I'm still, based on kind of what I'm holding in my portfolio, there's a lot of bias, but I'm still quite optimistic that over the next year, there's going to be continued sales in ccTLDs, especially .co and .io. I made a prediction on domain name wire roundup, where it was like, I made a prediction to say, okay, well, I think that we're going to see our first six-figure sale in .io, public six-figure sale. I know that some have been reported, under the radar of
Right.
that type of size, but we haven't really seen any in name bio. So I do think that we're going to see some limits get broken purely because of the demand for some of these, and then also the kind of shrinking pool of that top level. So there's a lot of these extensions. The best keywords have either been developed or they've been bought. So I think we're going to see some more five-figure sales, and I'm hoping I see some five-figure sales in that space. But in general, I think what's driving a lot of this is going to be what's happening in .com. And
Hey.
I can't see .com prices slowing down. I can't see them kind of like coming backwards, because, they're on a rocket ship right now,
Oh, man.
especially for like top end one word, also really good two words. If you're in any of the auctions right now, you'll know that actually, like, if you overpaid 2 years ago, you'd be very happy with based on a lot of the prices that are in the market right now. So if .coms continue to accelerate, I think that leaves room underneath. And at the moment, part of that kind of space has been filled with the kind of repurposed ccTLDs. So I think we're going to keep seeing sales in that space. And I'm kind of open to there being surprises along the course of the way, because we might see I think we might see ccTLDs get used in ways that we didn't imagine, or different
Right.
niches emerge, or so. Yeah, I'd say I don't know, cautiously optimistic. And I think that was I think Morgan said that, so I'm stealing it from him. But I am optimistic, cautious in the sense that I'm still aware that there's a lot of like economic ripples going through the world right now. There's a lot of just sheer money being printed or pumped in to keep everything going. But then I'm optimistic in the sense that businesses are still full speed ahead on going digital and kind of upgrading their digital presence. Domains are the kind of foundation for digital businesses. They're the bedrock of that. So I'm quite optimistic in that sense that, I can't foresee anything in the year ahead that will drastically change that direction.
No, I would agree with everything you said. Now, one thing though that is I'd be interested to know, and I know I told you last question, but this just emerged into my mind as you were talking about what things could possibly change the course or direction of the future. And so, what do you make of Clubhouse right now and its impact on domaining? Does it have an impact? Are we seeing anything? I know we just had a recent sale between Drew Rosner and Ashwin
Yeah.
for rl.org for something like $13,000. Does Clubhouse, start to play a role into the domain industry for 2021?
I think it's an interesting one. So I just signed up today. I got an invite. I think it's a tricky one, because we're seeing a lot of mixed things at the moment, in the sense that there's a lot of different information flying around on Clubhouse at the moment in terms of how to make money in domains. There's a kind of like a massive surge on .club domains, where I think they're partly being promoted by domain investors in Clubhouse, but also there's a connotation there between Clubhouse and .club, and we're seeing a lot of activity with those domains. So it's yet to be seen whether the effect it has is, positive or negative initially. The worst case scenario is like domain investing gets a really bad reputation because loads of people get stung and waste loads of money. And
Yeah.
that's kind of like, I hope it doesn't happen. And the best case scenario is it becomes another source of community, like Twitter has become for domain, as that, it's a place that we can all kind of talk, we can share knowledge, but it's also a bit more of a public space in that we can cross over with other industries.
True.
And share learnings between kind of like different spaces. So I think opening up domaining to a much wider audience is always kind of like a double-edged sword, because it depends on the message that's being given out. That kind of also, I'm excited about Clubhouse. Like, I'll start to use the app over the next week and listen in and play with it. But it worries me that actually who's delivering the message, or who's kind of representing the domain name industry,
Bingo.
depends on that, whether the outcome's positive or negative in the near term. But it also comes back to the piece that I kind of published today, because it's very easy for that message to be distorted, or it's very easy for that message to be delivered with a lot of gloss. And what I wanted to put out today was that really kind of like unglossed version, which is like shows, nuts, bolts, warts, everything, just to say, look, here's the good, here's the bad. Domaining investing is messy, it's difficult, it's stressful, it's one thing it's not, is easy, right?
Right.
And I think as soon as that message goes out that, oh, domaining investing is a get rich quick scheme, or it's an easy way to make a lot of money, I think that's a recipe for disaster. So yeah, I'm keen. I'm keen to explore the app and learn and jump in and out of a few different kind of rooms and conversations.
It's all fun and games until somebody loses their shirt. So yeah, man. Well, with that, Nikul, I mean, we're out of time. So hey, man, I thank you so much for doing the industry. A favor, honestly, with your annual review, looking and being as transparent as you are with what's not only being sold, but also with your fees and everything. And so thank you for taking time, because I look through the post and I'm like, yeah, that's at least a week's worth, if not more, worth of time and investment to put together something like that.
Oh yeah, thanks, Alvin. Yeah, and I think I've said it in the past, but that time investment also actually helps me a lot too. So I kind of I've always said the easiest person to lie to is yourself, right?
Man.
And this one activity each year keeps me in check, because even I was surprised along the way. I see things where I did not expect that, or I did not understand that. So oh yeah, thank you. I really appreciate what you're saying, but I also have selfish motivations there, because I just want to learn too, and I want to know that and what in my head, does it match what the data actually says? So
Right.
as an activity, it's really kind of helps me seek clarity, but then sharing it is also makes me really happy that kind of I can learn, but others can benefit at the same time too.
Totally. Totally. And I go, man, that's something that we all should be doing, even if we decide not to share it publicly. That's something that you should be doing along the way as a domain investor to keep checks and balances on what it is that you're buying, what it is that you're selling, and how well it is that you're exactly doing.
Yeah, yeah. No, I agree. I think definitely, even if you don't share it, but if you have visibility of it yourself, it basically is a really easy way to learn about what's working, what's not working. But also, I think as you're writing, you start to kind of clarify your own thoughts. You start to realize, okay, that things you thought were one particular way are not. Then once you've kind of seen it within the data, there's no way to trick yourself again. That's what's of interest to me. That actually is just a point of reflection in the air.
That is great. And so, with that, like I said, thank you. And thank you, listeners, for tuning in to Kickstart Commerce, where we share search marketing and domain name strategies to help grow your business. Please subscribe to this podcast via iTunes, Google Play, Stitcher, Spotify, or Podbean. Last but not least, please visit kickstartcommerce.com to subscribe to the newsletter sharing tips and tricks about the disciplines of digital strategy. Thanks. And that's all for now.